Hello, welcome back to Easy Forex Strategy. In this video, I want to show you the one mistake or something that you can add up to your trading style, because I noticed some of you guys place their sell limit orders, but suddenly they miss that trade with only few pips. So in this video, I want to rectify that mistakes, because some of you, I have noticed that they don't even understand how to draw the supply and demand zone properly, or they don't even know how those zones come up. So in this video, I want to fix that one little thing that you have to understand. So this is going to be a quick video that is going to be very simple to understand if you know how to draw supply and demand zones or even order blocks, because you draw those zones based on the candlesticks using the previous candlesticks without understanding the volume of those candlesticks. So as you can see from the structure over here, we can see that price was moving to the upside. We have a high here and then we have a low. Then price manipulated the previous high here with this move to the upside, and then suddenly those people who went long after this breakout over here, the market checks them out, and then we have a new low which will make a break of market structure, and then the market corrected on the side, and then you draw your zone here. Let's say you draw your zone around this area, and then you place your sell limit order around this area based on this supply zone over here, and then the market moves, but without triggering you here, the market drops, and then you cry inside, losing this profit over here. It's pretty much simple to understand this, but the only main thing that you have to understand is this area only, how you draw your supply zone here. So in this video, I want to show you how to properly draw this supply zone over here. And sometimes it can even go deeper. Let me show you. You can draw your zone here like this, but place your sell limit order here where the market reverses, but suddenly it pushes high. I will also show you why that thing is happening here. So before we move on, let's focus on this area here. Let me show you. This is the area where you draw your supply zone. Again, you draw your supply zone based on this candlestick alone, this bullish candlestick alone. This is the low, and then you predict that the market might reverse from here. You place your sell limit order based on this candlestick open, or even on the open, or even the low here, okay? But price move to the downside and then reverses around this area and then drop. Why is that happening? The problem is, one, because you didn't notice that the volume of this zone here, the supply zone, it didn't start from this last candlestick alone. It started from here. It started from this whole bullish momentum here. This is how your zone should be drawn at the first place. We just do this kind of thing here to reduce the risk inside our trade analysis. But just remember that the zone will start at this volume here, the last bullish volume that you can see on the market, okay? Because we can see that we have a bearish volume and then a bearish volume, but in between here we can clearly see that we have a bullish volume. This is where your supply zone should be drawn from. And then if you want to reduce the risk, that's when you can use the last bullish volume here. You will see it when we do some examples. It's pretty much simple to understand. You will see why some trades don't even come to your trigger area and why not. So let me try and find few examples so that we can understand this clearly. This is a proper example so that we can understand it. On this example, you will understand why that is happening here. We have a move to the upside, we have a low, we have a move, and then we have a low, and then you can see that this is your break of market structure whatsoever, and then you are predicting that you want the market to reverse from this candlestick here. You're predicting that the market will be bearish. So from here, that means you're going to draw your zone from here, okay? Because that's what we already know. But the one mistake that you didn't notice from here is the volume of this area. We have this bullish candlestick and this bullish candlestick. That's how you should draw your zone at the first place. But because we don't want to risk too much, we are most likely to reduce the risk like this and then predict that the market will come to this zone over here and then drop lower, okay? But let's see how the market unfolded from here. Reduce the speed. Okay, why? The market didn't even come and touch this area here. Why? It's because the problem is because you didn't consider this volume here. If you notice clearly, I will draw this zone from here. Look, perfectly so. It's because the market reversed from this bullish volume. Then the market reversed to the downside. That is why you see that price didn't even come to this area. So you have to consider that. But because most of the time you are going to use this last candlestick. I just wanted to clarify that to you, that sometimes you'll miss a lot of trade because you didn't consider the volume from the other side. You just consider only one candlestick. So now let's find another example. We are on the Euro USD 30 minutes, the same thing again. Let's see, let's analyze it first. We have a move to the downside, we have a move to the upside, we have a move like this, have a low. That means price is still bearish. We can see that we don't see something like this to the upside. We only see a bearish structure. So from here, guys, let me try to zoom in. From here you can see that, okay, I want to trade this market, and then you place your sell limit order based on this last candlestick like this. Place your stop loss above, and then you say you target that area. Let me draw this zone so that everybody can see it. Like this, you want the market come to the upside and then drop lower. But if you look clearly from here, you can clearly see that we still have a volume 1, 2, 3 candlestick before, after this bearish candlestick here, have 3 candlesticks to the upside. So these 3 candlesticks here, guys, they form a volume that should be considered as a supply zone. So all in all, your zone should be something like this. This is the, let me write it down. I'll just call it a volume supply zone or something like that. It doesn't even matter. The point is just for you to understand this concept here. And then a supply zone to reduce the risk will be this one. It's the supply zone to reduce the risk. So we can see that we have a volume supply zone and a reduced supply zone. So it will all depend on what kind of trader you are. Okay, so from here, let's see how the market unfolded from here. Let's see. You can see the market never ever came there. The market just shoot lower because the market just triggered on the supply zone, the main volume of the supply zone, not the reduced version of the supply zone over here. I hope you guys understand what I mean from here, but it's pretty much simple. Some will say this is a breaker block, but it's very, very, very different. You have to understand the volume that created a supply or demand zone to understand how your trade might trigger or might not. So you just have to understand that. Let me find another example to demonstrate this properly. Let's do this one last example over here. You'll understand clearly why it is very important to consider the volume of the supply and demand zones when you want to enter the market. So from here we can see that we have a supply zone over here, and then we want to enter the market with a short position over here to the downside. This is our analysis. If you want to analyze even more, you can see clearly that the market is trying to break to the downside, and then you want to do something like this. Let's say this is your analysis based on other things that I don't know, but this might be a proper setup. I think you can clearly see that you can even consider this low that has been broken, and then you want the market to trade to the upside to break this high over here and then trade to your supply zone and then trade lower. But there's only one thing that is missing with this trade, is because right now we have a volume of the initial supply zone over here. You have to consider the whole move here. So that means from this low to this high, price is likely to play around or go before time or retrace back before it can move to the downside. So from here, let's see how the market unfolded, because right now we have our sell limit order here. Our volume is this one area, these 2 candlesticks here, 1 and 2. Okay, we don't consider this bearish candlestick here. We consider this 1, 2 before the market can break to the downside. So let's see how the market unfolded. Okay, so now you see that why you'll be complaining at this area that you missed a trade with only 1 pip. Let me remove some of the things here. You can see clearly that, okay, price missed my entry point. You'll be complaining because you don't know how this volume initiated or how this volume is playing out. You have to consider this. So every time when you see like a double candlestick like this and then a previous candlestick that is bearish, consider the volume, because you might miss that trade. You might eventually miss that trade, and sometimes it might not be 2 candlesticks, sometimes it can be 3 or 4. You just have to go and backtest this so that you can see those kind of behaviors in the market, so that you can tackle them in the future if you see them. So from here, guys, you see, you'll be complaining. you say that supply and demand or order blocks don't even work, you always miss a lot of trades, is because you don't know how volumes work. But the key point of this video is to show you that if you miss a trade, you might eventually miss this side of the market that you didn't even notice. So if you have time, please go and backtest. Maybe you might eventually see this kind of pattern printing out in the market, so that in the future this might be easier for you to trade them, because even if you don't backtest, there's nothing good that is going to come out if you just sit down and wait for something that like a signal or so. So guys, I hope I'll see you on the next one. Please don't forget to subscribe to this channel. I'll see you on another video.